My next guest says there is some reason for concern here. Let's bring in Brent Beardall. He's the CEO of WaFd Bank. Welcome to you. And tell you were at the RBC Financial Services Conference yesterday. Was there a lot of talk about private credit?
There was a lot of talk about private credit. And the reality is, in the whole banking sector, we talk about cycles. There's credit cycles. And it's really been 15 years since we've seen a credit cycle. And a number of the investors I was talking with said, literally, I haven't lived through a credit cycle. And if you think about what's happened with banking, we have kept our balance sheet so pristine, but private credit has kind of taken up, okay, we'll make the riskier loans. So it makes all the sense in the world to say, okay, if we're going to start having another credit cycles, where do you see that come through? And that's private credit, and that's what's happening now.
I like the way you put that in. Many think this is a reckoning moment for the industry, maybe an overdue one. The only general concern, I mean, other than if you're an investor in this space, is there going to be broader fallout? You know, do we have to worry that because of kind of panic in one area over here, that it's going to spread throughout the financial system?
Yeah, I don't think so at all. I think it's normal. If you're in the business of lending money, you're going to take losses. That's just reality, and we plan for it. And I think the banks are in really good shape. The question is, what was the underwriting on those private credit? Where did they go? And the irony I find here is banks said, okay, we're not going to make these loans, gave the opportunity to private credit. Then banks turn around and they loan money to private credit, and they call it business loans.
That's exactly right. Yeah. So is that an issue?
It is an issue for some. Certain banks, for WaFd, for example, we said we're not going to do that. We find that a little bit, counterintuitive. Why would you not make the loans yourself, then lend it to somebody else who's going to make the loans? But as we know, there is always it's a river of demand, and if you don't meet that demand somewhere, you'll meet it somewhere else. So
you think it's going to be kind of contained? Like, yes, there are going to be losses. Yes, the industry may adjust in size, but it's not something that So do you think financial stocks here present an opportunity? You know, if you think maybe the economy does okay, I don't know what you're seeing in terms of loan growth.
Yeah, I think financials present actually a huge opportunity. You look at our stock, for example. We're sitting here trading literally at tangible book value.
Wow, are you?
Even after the nice run we've had, we have a wonderful chart that shows the growth in book value per share. And I can't control exactly what happens on the stock price, but I can control growing book value per share. And we've done a nice job of continuing to grow book value per share. So today, the biggest opportunity we have is to buy our shares back and increase the slice of the pie for our existing shareholders.
Is that frustrating, though? I mean, do you want to put that money to work in other ways?
Oh, it's very frustrating. Of course, we want to put that away, or not put it away, put it out, get it out there in loans. But when you're seeing the competition make loans that are sometimes irrational,
I see.
The most important thing you can do as a banker, and it's so difficult, is to have discipline. Know when to say, hey, I'll pull back and not grow, or hey, this is a good time to grow. And with what we've seen with private credit, we've said, okay, let's pull back a little bit, let them make those loans that we might think are a little bit too risky, and then we'll see what happens there, and then eventually we'll come back to us.
Yeah, it's a good point, though, about you want to make your loans at the right price, maybe not what some others are doing. Meanwhile, there's this whole new, tell me about X Money. Okay. This is a product that Elon Musk has introduced, which is sort of taking off, as I understand. And you think this is something the industry really needs to be watching closely?
I know very little bit about it, like everyone else does. It's just being announced. I think they have it out in beta. But I think of Elon, and whatever you think about him politically, he's the genius of our time. And what he did to the automobile industry and to the big three automakers with Tesla, I think he's going to do the same thing in banking with X Money.
Well, you better hope he doesn't. I mean, that doesn't bode very well if you're sitting on the other side of that.
But we're not going to take it the same way that the automakers did, right? We have to. The winner will be the consumer. X Money is going to offer a 6% interest rate on deposits.
Jeez.
That is a loss leader. You can't make money, right, with the Fed paying 4%. You can't make money at 6%. So he's willing. The richest man in the world is willing to pay an additional 2% to take market share.
But that's not, how do you compete with that?
Well, you don't compete with it just based on rate. If you're just going to compete based on rate, you don't compete, right? But what we offer, especially as regional banks, is relationships. So you have to have great technology. It's going to make us better. So you pair great technology with relationships. That's where I think we're going to be able to compete. But they are going to take amounts of market share from the biggest banks that I don't think we've ever seen in our lifetime.